Well, as you heard, their shares of Macy's under some pressure this morning after reporting second quarter results. It beat on its top and bottom line, but investors don't seem happy. Well, our very own Brooke DiPalma listened in on that earnings call and has the lowdown on what is driving the stock down this morning. Hey, Brooke.
Good morning, Rochelle. That's right. This is the largest intraday drop since June of 2022 following this earnings call with executives this morning that painted a cautious outlook on the second half of 2023. Some key takeaways from that call. We did see same-store sales decline down 7.3%. And while that was better than analysts expected, customers are continue to shy away from items that they bulked up on during the pandemic. That includes activewear, casual, and sleepwear. That drove those same-store sales to continue to decline. They did say, however, that categories like beauty as well as fragrances and the high-end makeup cosmetics do continue to do well. Meanwhile, Bloomingdale's business did come in same-store sales decline there, but less than the overall same-store sales report. They said that they're really focused there on being the winning option for multi-branded upscale retail. A highlight at Bloomingdale's is their outlet locations continue to outperform. And later on this month, they're opening up their 21st outlet. Now, moving along to perhaps the biggest surprise of this report is that decline in credit card revenue. That came as one of the biggest surprises across multiple reports from analysts on the street this morning. That was down $84 million from last year. Now, the CFO said that they had expected delinquencies to rise, but it happened faster than they had predicted back in Q1. They also said the speed of those delinquencies across all age balances accelerated after that first quarter report, especially in June and July. Now, the CFO did add that the team is working to mitigate the impact of this with its partner at Citibank, and so perhaps that is a telling sign of something that we'll look out for in Citibank's upcoming third quarter results. And in addition to that, a bright spot of the report, they did say that one of their five growth vectors is that new smaller format that continues to outperform. They now have 10 smaller format locations, and they plan to open 4 new store locations with this smaller format later on this year. And so lots to digest in this report, but really doubling down on where the consumer is at.
So, Brooke, how does the company see macroeconomic conditions impacting the consumer?
Yeah, absolutely. Well, they did reiterate their guidance here, and they now expect net sales to be between $22.8 billion and $23.2 billion to round out the year. But the CEO telling investors on the call once again that they are taking a cautious outlook when it comes to the consumer on the back half of this year. They continue to highlight the pressures that they're seeing. They did identify who exactly their consumer is. They said that it's roughly 50% with an average household income of $75,000 and under. Now, the CFO also didn't shy away from the headwinds that the consumer is up against. Take a listen.
So the macro environment really is having the lion's share of the impact on credit and is a real indicator of where we think the health of the consumer is and supporting our cautious approach. The one metric we find quite interesting is the debt service ratio, which we leverage as a proxy for the consumer's ability to pay debt using their disposable income, personal income. So this is about credit card balances. This is about student loans, which we know is going to come into focus in the next month or two, auto loans, mortgage. So we just believe that the customer is coming under pressure because these are new realities that they have to continue to deal with as we get through the back half of this year and move into next year.
Now, this is something that we also heard from other retail brands like Target and Home Depot, all these headwinds up against the consumer. And so you think about the vibe check of this call, well, not so good. It's actually pretty bad about when you think about the headwinds that the consumer is up against, when you think about those that are going to Macy's for the back-to-school shopping season, and when you think about that holiday season, especially they also mentioned Halloween even, rounding out, the back half of this year. There's lots of different headwinds that are impacting consumer spending that Macy's is very aware of. And so bad, but maybe it'll get better next year, Rochelle.
We'll certainly see that holiday spending season will be a key one because, as we mentioned, starting to see some cracks there for the consumer. Great stuff. Appreciate that breakdown for us, our very own Brooke DiPalma.